Hello, welcome back. And today's topic is the mortgage lock-in effect. Welcome back to SeeWing Yi from the Yi Real Estate Network. So let me share my screen, and here is the title of my presentation, The Mortgage Locked-in Problem. Why millions of homeowners are trapped and what it means for the market. Does that mean what I mean by that is the homeowners are they in debtors prison? Debtors prison. Have you heard of that term? No, this is a good debtors prison. It's not consumer debt. It's mortgage debts, good ones. So the lock-in effect, when rates surged from historical lows back in the pandemic, right, a few years ago, millions of homeowners found themselves holding something very valuable, a mortgage far below their current market rates. To sell means to surrender this historical low mortgage 30-year fixed rate as low as 2.5%. Several of my mortgages, including my primary home and some of our rental properties, I have a mortgage rate of 2.5 to 2.75%, which is absolutely incredible. So the way I look at it, it is an asset. My mortgage payments, my houses is an asset, not a liability. What I mean by that? Well, let's hear the rest what I have to say. So to a lot of homeowners, to sell means to surrender that rate forever. So for many families, the financial cost of moving exceeds the life benefit of moving. So why it does not move? Unlike a stock and a bond, a low mortgage rate cannot be transferred. To move, a household must destroy the asset, replace it at today's rate, which is like 6.61%, according to the Mortgage News Daily at the date I'm recording this, which is May 26, 2026. Okay. So selling is no longer just a real estate decision. It is a decision to give up on one of the most valuable financial products and asset a household owns. So the data, what the lock-in effect has caused the market is prevented a sale of 1.72 million homes from 2022 to 2024, according to the Federal Housing Financial Administration, FHFA. 7% is the price premium added by the supply constraint. 2.3% of those primary homeowners are becoming accidental landlords. And that's not a bad thing either. So, yeah, they rather rent the property than sell it because they could retain the historical low mortgage and they collect rent if they were to uh, become an accidental landlord. All right, the market paradox. Rates have eased, stabilized. I don't know. The market stay stuck. The fixed rate is now 6.23. Right now it's 6.67. But it's gonna, I believe the mortgage rate gonna stay at the mid 6%, absent any changes in economy in the world. But if the Iran crisis are stabilized, if no more war, then inflation may subside, and then the mortgage rate may go down this year, 2026. But I'm not holding the hopes too high. So my expectation is that the mortgage rate going to be in the mid 6%. Annual Annualized sales pace, according to a National Association of Realtors, on the March 2026 data, is still stuck at below 4 million. We need at least 5 million annual sales in order to have a normal market. So we are still not seeing enough sales transaction, even as the spring housing market has pretty much subsided with a thumper. Medium sales price nationwide is still a very, very high, record high, 408,000. So rates have eased, but not that much. Buyers face a worse version of the market. Okay, the potential buyers, especially the first-time home buyers, right? They are having a lot of challenges. So higher mortgage payments, skyrocketing home prices due to the pandemic housing boom, still limited inventory, prices that refuse to fall. There's no housing crash, by the way, contrary to what those doomers, those doom porn YouTube contents has been putting trash out there. The Crash Bros, they are wrong. Don't watch those Crash Bros videos. Okay, so let me see what else that are important. The rise of the accidental landlord. Yeah, like I said before, this is a nice option people have if they want to rent out their house instead of selling it. So move up sales becoming a hole in rent. New rental supply enters the market. The next buyer loses a listing and the owner takes on new complexity. So the market is rewiring and rerouting permanently. 2.3% of the rental listings were previously listed for sale, a near record share, as homeowners choose to rent rather than forfeit their historically low rate mortgage, according to Zillow. Right? So the path forward, two steps. One, recognize and respect your asset. A low mortgage has real financial value. Okay, telling yourself to surrender it for the sake of market liquidity is not a serious proposal, and homeowners they won't do it. Okay, and they should not do it. So build around the reality. Design financing that moves with the household instead of demanding a balance sheet reset at the point of sale. Build the tools that accidental landlord needs to operate responsibly. To move up sale becoming a hold and rent decision. It is a permanent feature, not a temporary glitch. So, a healthy housing market is not one where every owner trades every few years. It is one where families can make the move their lives require without blowing up the balance sheet that got them there. So, life guarantee movement, of course, there will be some people that needs to move because of a new job, because of aging parents, because they need they have a higher family unit, they have more children, so they need to move, and then some people will have no choice but to give up the low historical mortgage. So millions of households have learned their mortgage is not just a payment, it is a financial asset worth protecting. So that is what we have in front of us. So my takeaway is 40% of the homeowners have no mortgages, right? And 25% of the homeowners have mortgage rate below 4%. 80% of the homeowners they have mortgage rate below 6%. So it takes a lot for somebody to sell to move up buyer. So the market is stuck. A lot of people are sitting on $13 trillion of home equity. So those homeowners have a lot of equity. They're sitting pretty. As a result, the very few transactions going on this year and even beyond. So yeah, your mortgage is an asset, especially when you're sitting on a historical low mortgage. A lot of people have a lot of home equity. So no housing crash, little bit of housing correction in certain markets in a country. So it's pretty much a normal market. It's a I call it even a boring real estate market. Nothing's really happening, right? So, so that's my takeaway. So please comment below what are your thoughts, what I just said throughout today's short presentation. And if you receive any value whatsoever from this video presentation, please like and subscribe to my YouTube channel. And finally, please put your email into my website so you can potentially become a free member of our real estate investing community. So, uh, once you do that, you will receive weekly newsletters on free educational content around real estate investing and around the housing economics and so forth. Thank you so much for watching. I'll see you next time. Bye bye.